Everybody, welcome to this session. Man, I am so excited to have you here because in this session, you are learning about buying and holding on to real estate, basically how to be a landlord for long-term cash flow. You know, in today's market, we have all of the prices across the U.S. and across the world that values have gone down. It's a fantastic time to buy real estate. A lot of people, unfortunately, are buying to flip rather than buying and hanging on. And this session talks with you specifically about how to hang on to real estate, how to get excited, and how to have your wealth grow over the long period of time. So to talk with us today about wealth building, I've got my good buddy and partner on the phone with us, who is a landlord in, of all places, New York City. Darius, you on the phone, buddy?
Yes, sir. I'm here. And again, not to slight any other markets, but I think being a landlord in New York City is the hardest place in the country to be a landlord. You know, we have some interesting characters here that their life's goal is to study the system and to figure out how they can kind of crack the code on it. And I'm talking about tenants being able to do everything sneaky you could think imaginable. So this happens to be one of those markets. And I love what we have up here now. You know, flip, 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 hold, which basically breaks down the format that you need to look at with buy and hold and multifamily dwellings. You know, Bob and I are experiencing a lot of different strategies, whether it be wholesale, short sale, notes, you know, tax liens, you know, you name it, we've done it all. The big reason why we do those types of transactions that bring in that massive income is really just so we have capital that, in essence, we've raised to buy cash flow. You see, the thing you need to understand more than anything else is real estate and really business and financial life is only about cash flow. It's not about how much you made in a lump sum. It's about how much money you're making on a consistent basis. That's passive income. So that's what we mean by flip, 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 hold. Basically means you flip a property, flip a property, flip a property, take that capital, buy a property that's now going to give you cash flow. So it's a great little strategy there to use. You know, cash flow is the most important thing out there. Nothing is more important than that because that is what really secures a financial future, and that's what you use to actually build a legacy which goes beyond just building wealth. So the next thing I'd love to speak about is what has happened kind of with this cycle. You know, back in 2001, that was kind of the beginning of the cycle, and that's a big thing about real estate. It's cyclical. It's always evolving, always changing, but it's predictable because we've seen it happen time and time again. We now are at a certain part in the market where people are buying properties and holding on to them again, though flipping will always be popular and has always been popular. We will start to see certain parts in the market where people are buying properties because they can get them at such a low discount, and it's very cost effective to fix up the properties. And when we're in a market where people can't necessarily afford to buy properties, financing might be a little bit difficult, that means that the landlord is king. That means that these people have got to live somewhere, and the majority of people are starting to drift towards the area of being tenants, which is what we see a lot in New York City. So right now is a great time to buy and hold, to get a property, to generate cash flow, and it's extremely important that a person take advantage of this opportunity.
I think it's
So
cool, Darius. I'm sorry to interrupt, but you know, we just got out of a period where people were always all buying real estate, but none of it was cash flowing.
yep.
They were paying way too much for real estate. Well, the prices have gone down, the cost of lending has gone down, the interest rate's gone down. Now you can go out and you can buy a property and have that cash coming in every single month. And what's really cool is you can have somebody else build up your equity. Now, I know you do a lot with multifamily versus single family. How do you compare those two?
Sure, and that's a great question, Bob. I get that all the time. You know, I actually think that multifamily is 1,000 times easier to do than single family. I mean, that's for a few different reasons. Number one is a type of clientele that you're dealing with, whether that's a buyer or a seller, they tend to be more savvy. There's not emotion that's involved in the transaction. There's more logic in there. And again, it's because multifamily is a little bit more highbrow. And I don't mean highbrow as far as you need to know more stuff. I just mean highbrow as far as the people involved are a bit more experienced and look at it more from a business perspective than just an emotional perspective. The big thing with multifamily dwelling versus single family is diversified risk. And what that means is if you have that single family dwelling and the tenants in there for some reason stop paying, well, now the property will be in a negative cash flow state. Now, if you're in a multifamily dwelling where, let's say, you've got 8 units or maybe even 15 units and one tenant stops paying, it won't devastate you. Of course, it may hurt you a bit, but it won't devastate you. It's not as detrimental to your cash flow as it is if one person is in a single family and stops paying. The big thing with that too is you can also increase the rental income easier in a multifamily dwelling than you can in a single family. As far as certain things you can do is adding in even coin machines, being able to just do normal rental increases, so on and so on, improvement of the property. A big thing too is level of management. When you're dealing with a single family, a lot of times, you can manage a property yourself, but when you're dealing with a multifamily dwelling and you have numerous of those, you actually bring in a management company, which gets to alleviate a lot of your stress. With single families, if you own 2 or 3 of them, it doesn't really make sense to bring in a property management company. It just doesn't make financial sense to do that. So you end up handling the property itself and the management of it, which can be excruciating. I'm talking about going and fixing a broken toilet bowl at 3 a.m. in the morning. A lot of people probably don't set out to do that when they get involved within real estate.
We're the same page. I own multi-units, and man, I'm so glad that somebody else is changing those light bulbs at 3 in the morning.
Exactly. And the biggest thing is cash flow. The biggest thing is cash flow. The money that you'll make from a single family is good, all right? You can get a single family to cash flow. I have a bunch of them that cash flow, and that's all good and well. But nothing cash flows like an 8-unit building or a 16-unit building or a 150-unit building. And a lot of people say, well, how can I get to the point where I own an 80-unit building? You start with a building that has 2 units, a duplex. You move to a triplex, right? You move to a quad, and you go up, and you got a 6-unit, an 8-unit, and before you know it, you leverage one property to another, to another, to another, and before you know it, you get to the point where buying an 80-unit building is just normal. It's just second nature. So, again, the biggest thing to take away from all of this is cash flow. Now,
Absolutely.
Bob, I know you had some questions about some benefits here. I'd love for you to kind of discuss a few of those things as well.
Well, the benefits, I think, in landlording are phenomenal. The big benefit that I absolutely love is that you're building long-term wealth. A lot of folks are really into the quick cash, which is great. We're all into quick cash, but the bottom line is real estate is set up for you to build long-term wealth. And what happens is someone else is making your house payment for you, or someone else is making your apartment payment for you. And at the end of the day, 15 years go by, or 20 in some cases, you've got a free and clear property that somebody else paid for. So other people are building your equity. And then in addition to that, with that whole cyclical thing of real estate, your property is going to go up in value in the next 15, 20 years. That's all there is to it, especially if you're buying now. So you're getting an asset it's appreciating in value, going up in value, and you're getting somebody else to pay for it. I just think that's phenomenal benefits. And finally, before we finish up this particular session, I want to caution everyone on the who's listening to this or watching this, that there's a couple of things you need to watch out for. We talk about how wonderful landlording it is, and it really, really is, in that you're building your equity and you're building long-term wealth. But there's a couple of things you need to watch out for. And Darius, you want to talk about those?
Sure. The biggest thing is management issues. And even when you bring in a management company, there are things you need to look out for. You got to remember that no one is going to treat your property like you're going to treat your property. So just because you have a management company that came in doesn't mean that you can just kind of sit back on your laurels and just expect them to do everything. You really should have an accountant that's involved, that's crossing the T's and dotting the I's and checking the work of the property management company. You want to actually go on site yourself every now and then, when possible, to actually take a look at the property and see the upkeep. That's especially if the property's on the other side of the country. You should be checking out at least once or twice a year just to make sure that things are in order. You also want to be looking at the books and making sure that your property management company, as crazy as it sounds, is actually paying the mortgage. We've heard horror stories of property management companies collecting the rent and basically not paying the mortgage, and what should have been going to the mortgage was going in their pocket or going with them to Vegas or some trip. So those are some of the things you should look out for, and you should also always be aware that there are ways of increasing the income or the cash flow of the property. And if your property management company is not constantly giving you tips of how to do that, you need to find someone else because they're not playing on your team and they're basically losing you money. Rental rates and occupancy are as big as well too. You want to check and make sure that you are increasing the rent at the appropriate times and not just letting things lapse or forgetting to do that. And you're increasing your occupancy rate and keeping your occupancy rate as high as you possibly can, which is 100%, meaning that you want to keep all your units completely occupied. And you want to make sure of the good quality of the people that are actually coming into your buildings as well. Pre-screen, pre-screen, pre-screen. I cannot say that enough. It's extremely important.
That is so huge. I just finished a property, and my property manager put somebody in with a 3-page rap sheet and
Wow.
wondered why they left in the middle of the night. Anyway, folks, landlording is really cool. It's a great way to build long-term wealth. Darius, I know a lot of folks who are listening and watching have questions on how they can learn more about this.
Sure. Well, one of the things that we have put together, Bob, myself, and our other partners, and basically the members of the Fast Forward Advisory Board, is something that we call REAP, and that stands for Real Estate Action Plan. All you need to do is go to the right side of the page, enter in your first name and your email address. We'll give this to you 100% for free. What this is basically the way that we have formed our individual businesses. We're giving you a step-by-step breakdown with action plans and action steps in there. Every day, or rather every other day, you're going to get an email over the course of a 30-day period. We'll go through how to do market analysis, how to actually find trends, how to determine what's happening in certain markets that might not be in your local area, how to do marketing, how different strategies work, how to stack strategies one on top of another, how to be able to raise capital, how to be able to find transactions, and not only find transactions, but find good deals that other people have basically stepped over, how REOs work and short sales and so on and so on. Additionally, as a bonus, again, if you go and you act now, we're going to give you a video. You'll actually be redirected to a video. It's a short 7-minute video that goes into detail about what's happening in today's market. It's a current market report. We also really dig into the opportunities that a lot of people aren't even talking about. There's something that we have also deemed called the 4 pillars of real estate success that we're going to get into in great detail. It's a short but extremely impactful and powerful video that you're going to want to take a look at. Again, we're giving you all of this 100% for free. So again, take action, put your information in there on the right, and we look forward to seeing you on the next training. All right.
Perfect. Cool.
Can you hold on one quick second, Bob?
Great, because we've got, 3 more to go. We've got REOs, rehabs, and short sales.
Yep.
I'll leave it a second.